Hey, my name is Dr. Kraus and welcome to my channel. In today's video, we're going to be taking a look at Boss Energy. Finally, some more uranium after spending the last couple of weeks on precious metals. Now, over the next little bit, of course, I've been trying to do some of your guys' suggestions depending on market conditions. Like, hey, this guy suggested this company and the market conditions look like this company could be looking good right now, so then I'll do that company. So over the next few weeks, even though uranium has ran up quite a bit, I still want to get through a lot of the requests that I have. So that's what the next couple of weeks are going to be. I have about a dozen companies, so I'll try and get to as many as I can. Now, let's get into Boss Energy.
Alright, here we have Boss Energy trading with the ticker BOE on the Australian Stock Exchange and BQSSF on over-the-counter exchanges in the United States. They're currently trading at 22 cents per share USD or 31 cents per share AUD with a $706 million market cap in Australian dollars and a $510 million market cap in USD with a price per pound of $7.13 USD, which is really, really high. But what are you going to do in this day and age of SPUT pushing up the spot price to $45? But all in all, that is definitely very high, at least relative to when I was looking at companies previously. Lots of these companies, some of them would even have price per pound of even below a dollar, so that is really high. Not a fan of that. But let's move on to the stock chart here. Now, we can just see in the last 6 months, they have absolutely been ripping, and we had a very short consolidation period here before coming back up, so it's very possible we'll run back up and come to higher lows, but I'm not sure. I'm no technical analysis. Or an analyst, not analysis. Analyst, that's the right word. Good job, me. But that's not important. Then when we look over here at the max chart, we can just see it has gone completely vertical here. Alright, so Honeymoon is a brownfield project, which means that, okay, there is infrastructure here. They just need to do some little additions here to get it going. And because of that, they only have upfront capex of $80 million. And they're in South Australia, which federally and in many other Australian states, they aren't a fan of uranium mining, but in South Australia, they are. Though there's also the issue that Australia is now a horrible totalitarian state, but I'm not gonna rant about that. We'll see how Boss Energy deals with that. They'll be able to get into production very quickly, less than a year from their investment decision to when they can start producing. And they are fully permitted and all that kind of good stuff. So going over just kind of a timeline here, back in 2015, they acquired Honeymoon and had a mineral resource of 16.6 million pounds. And so in 2018, they ended up getting the remaining 20% of the project, so they now have 100% ownership. And by 2019, they were able to confirm a mineral resource of substantially higher, of 71.6 million pounds. They had a feasibility study done by 2020, and just recently they came out with an enhanced feasibility study. And now they're, of course, maintaining a strong exploration focus, exploring more, and doing all that kind of stuff, and trying to get this mine ready to go. Now here's a production summary. We can see that at the start there, this is all normal. This is fairly standard, right? First couple of years, they have to ramp up and ramp down in the last couple, with AISC being higher at the start and end. But while they're going, they'll have a pretty steady 2.5 million pounds of production annually. Now, this does seem to be a common issue with Australian juniors, is that they have a ridiculous amount of shares outstanding, over 2 billion, which is just obscene. Even Bannerman I thought was bad, and they only had, I think, about 1 billion. But this seems to be a common problem, as my YouTube comments have told me, among Australian companies. I'm not sure why. Not a fan of that, but I guess we'll have to deal with it. One last recap here. The main thing I want to just note here is that they have over 1 million pounds of physical uranium in their inventory, which is good to see. ESG, all that kind of stuff. So let's get into the project itself. Alright, so here we have the Honeymoon Deposit as a part of their Honeymoon project. This says 36 million pounds of mineral resource, and before you said it was 70 million, but that's because this is only one part of the total Honeymoon project. Yes, the deposit and the project called Honeymoon, and they have additional deposits inside of the Honeymoon project. Make sense? Hopefully it does. I completely ran out of breath during that sentence. Hopefully it didn't sound too horrendous. Now, enhanced feasibility study here, so it is more accurate than a PEA, PFS, or even a DFS, and it is an ISR mine, therefore lower OPEX, and it's a brownfield project like we said before, so it's nearly ready to go once the U price is high enough, and there's a 30% tax rate on that with a pretty high royalty of 6.5%. So with that high royalty and tax rate, that could definitely hurt their free cash flow, because that's definitely on the higher side. 36.5% of their profits they got to pay away. And so here, once again, there's 36 million pounds specifically in the Honeymoon Deposit with a grade of 0.066%. You usually want about 1% to be considered high grade, but it's still low enough OPEX, so that makes up for it. incredibly low capex here of only $60 million. It said $80 million before because I'm including ramp up in total capex, which is about $20 million, and in total there's still only about $150 million in capex, which is really good. Of course, this is also in United States dollars, and so $8.46 per pound of uranium, with construction of under 1 year, and so decision to execute was January 1st, 2022. Therefore, there would be cash flow by 2023, which is ridiculous. Even 2024 is seen as optimistic for most companies, so that could give Boss a major boost in this bull market. And they expect to be producing for 11 years. Now, this is the total here, 71.6 million pounds in the ground at a grade of 0.062%, so slightly lower, because like I said before, in the Honeymoon project, there are 2 additional deposits, which are Jason and Gold's Dam, alongside the Honeymoon deposit itself. The EFS only details plans to mine Honeymoon, but Boss could extend operations to Jason and Gold's Dam, and they're only going to be producing 21 million pounds, so they're going to have 50 million pounds left in the ground here. Alright, so at $46 uranium, they are significantly overvalued, and that goes all the way up to $100 uranium. Now, don't click off quite yet. Like always, these conservative numbers do that 50% inflation and 10% discount rate, and so I also added in what they are using with no inflation and an 8% discount rate. And using that 8% discount rate essentially means, like, already kind of is factoring inflation a little bit into there and all that kind of thing, so they are still decently undervalued when you're not using my ridiculous parameters. I just wanted to show that for, like, the difference it makes when we're talking about this inflation that I add into all the companies I do. Plus, there's still 50 million pounds in the ground, and they'll likely be the first junior production, and they've already doubled since August. Just on the bottom there, that 14 cents is in Australian dollars, and they're now at about 32 Australian cents per share, and so they still have doubled from about 11 cents US to over 22 cents US. So, even if they look overvalued, they could significantly run from here, and there's lots of technical reasoning behind that, all that kind of stuff, and they could, of course, be pushed with the boat, all those sort of things. But that's just what my fair value came out to. Don't riot. Alright, we'll be doing Lotus Resources next week, probably. So, see you next time.